Hello all and welcome back to my YouTube channel. Today I wanted to talk to you about two stocks from my swing or long-term portfolio. Again, this is not an investment advice, it's just for education and entertainment purpose only. All right, the two stocks, Facebook and Dominos. As you can see, these stocks are mostly one of them, Facebook, is coming from communication sector. The other one is from the consumers or services restaurant sector. The reason why I bring this up is because if you look into some of these ETFs specific to these sectors, you will find them as some of the key holdings. And even SPY, if you were to look, or any of those S&P 500 based indexes or any growth ETFs, you will notice Facebook as one of their key holdings amongst the top five. Same thing goes with Domino's. You will find it probably in momentum growth or the mid cap growth ETFs. You can do a search on ETF.com where you will find this information. Um, the reason why I picked these two stocks is because I wanted to show you their returns and their revenues. The returns over the last 5 years. Again, this is calculation which I did based on my spreadsheet, which is not going to be like 100% accurate. Maybe there will be error of 1 or 2% here and there. Um, so looking at this, if you noticed Domino's Pizza over the last 10 years, 50%. That means if you were holding it from 2009 till 2019, approximately the 10 years, you would have got a return of 50%. Over the last 5 years, 30%. And if it's the last 2 or 3 years, close to 20 to 30%. But looking at these returns, don't you think this is such a good return averaging over a 1 year period? If you had to compare it with, let's say, real estate, maybe if you're lucky enough, you got it in a good location and the price is doubled. But other than that, over the long term, like if you thought about 5 years investment, where you would have got 30%, don't you think this is still a good bet out there? Like, even if you were to compare the bonds are for conservative people. So since you're being conservative, you are not taking any much risk, so you will not get that reward. So wherever there is risk, obviously there will be higher reward. But I'm not talking about options and leverage instruments, things like that. I'm talking about somewhere where you find a good business and you can get a good decent return. Don't you think you would want to do it? I certainly would do. So that's the reason why I posted Domino's. This is one of my key holdings in my portfolio for a swing trade. I entered this at an average price of around close to 234, and I believe based on today's price, it's around 232 maybe. So this is a swing trade. I'm expecting it to bounce around 238 to 240 level, where it will face again a key resistance. And if it breaks out over the coming months, it won't happen in a week or so. It will only happen maybe in the coming months. So that's a risk I'm willing to take. And down the line things can go wrong if there is a recession worry or things like that. If you are going to focus too much on the recession worries and news outflows, then there will never be an opportunity for you to invest in the stock market, because this has been spoken of right from the beginning. Whenever you see all this news flows out there, and if you're going to panic and you don't want to invest, there is no opportunities you will ever find. Sometimes when you get the opportunity, especially in the case of DPC, which I feel like it's corrected fairly well, I don't mind dipping my toes in, and I think it's holding a key support here. And over the medium to longer term, I feel this has a tendency to bounce back, retest probably 250, 260 zone. And if it breaks down, I'm sure it's going to go in and backfill all this gaps that it had in the prior years. So having said that, this is one stock idea out of my portfolio and the returns. And let's also talk about its revenues, which is quite interesting. We need to understand as to why this stock appreciated with such double digit growth, right? The reason is here, simple. Remember, minded that in 2008, the stock was actually in single digits. from 2007 to 2008. You can imagine where things can go wrong as well. But once the new management uh, took their position as well as changed their servings and ingredients, things got better. Not that I'm saying it is the greatest pizza chain of all, but I'm just saying it's certain some things that you have to keep in mind what fundamentally changed. And if you look at the revenues, like in quarter three or quarter four, they were projecting like 446 to 642 or 500, in between the $500 500 million range. And now when you go back and look in 2019, it's almost closer to 800 mark, doubled, right? From 400, uh, doubled. You cannot say doubled, maybe close to 90% returns. So that's the reason why it appreciated. The revenue is climbing up. And you see, in quarter four of 2008, it closed its revenue close to 1 billion. So you see, it's increased. But having said that, nothing is guaranteed in the future. And these things do happen because these things happen because um, seasonally the consumer is in good shape, and also at the same time they are having some competitive edge in terms of their apps, things like that which they have innovated. Those things do come into play. That's what's happening with Chipotle now. If you notice, the stock has doubled, but that's for some other day. Now let's go and revisit another stock in my portfolio, Facebook. Facebook hasn't been there for a longer time. It started in 2012. It started trading in 2012, but I do not know the exact date. Its price ended in 2012 at 26. So I'm not able to get an average for that year. But if you noticed, for the last 6 years, 34, last 5 years, 23, and the last 2 or 3 years, it's just 10 or 11%. But you need to understand the market cap of the stock is very high. That's the reason why the returns are not that good, as well as you won't see much of a growth happening, like tremendous growth. But I will show you the revenue where it has appreciated quite well. Having said that, these kind of stocks can always do a buyback or have innovative products around its core product. That way, it's at the top. That's the reason why if you see market cap wise, many of these stocks are always like Amazon, Facebook, Google are always on the top five holdings or top 10 holdings. The reason is because these companies have replaced the other companies which were out there, like ExxonMobil or some other names, over the longer term, like at least for the last 10 years. The reason is because they have got a competitive edge, as well as new product innovations where revenue started flowing in. And having said this, let's go and take a look at Facebook's revenue. Let's start from 2014, 3.2 billion for one quarter, right? Or 2004, quarter 4 2014, 3.8. So roughly around 4 billion. Let's look at where it is today. Quarter 2 of 2019 is close to 16 billion. That is four times what they used to make in 2014. So you see what's happening. It's not something which magically happened. The stocks prices appreciated just not just because of some booming economy, or somebody went in and said, like, the Fed started purchasing, and the money flowing in made other banks purchases. It's not just that. It has to have a fundamental reason behind it, to support it. So this is the reason the revenues are growing. This is one of the reasons. The second reason could be stock buybacks that will also appreciate once you reduce the count. And if you do not have a debt in your balance sheet, that's even better. There are a lot of things like that. As long as the business is positive cash flow, producing good revenue numbers, over the long run, it will be a good business to own, just like Warren Buffett says. So let's look at Facebook. This is a stock which I bought in at an average price, and this is one of my core holdings, somewhere around 196, 197. I was under the impression it will hold here and break out, but it didn't. Instead, it went back and tested the support. With all these corrections happening, that's fair enough. I think at least for the coming months, the stock will appreciate, and maybe in the coming months it will bounce back closer to or above 200 range. But for that, it'll take time. So it's not going to happen in 2 weeks or 3 weeks. It might take months. Um, And having said that, and having shown you those recent gains that it has made, don't you think it's worth your time to look at some of these names where it has gone up over the years and the reasons for it and what can be done? Same thing I can say for another stock called Visa, but that's for another day. Again, the same stories. The reason for all this happening is because there is a growth happening, there is a fundamental reason behind it, and as to why, what, what is helping it support the stock. And with this, I'm ending my video for now. I hope you all enjoyed it. If you have any questions in regards to these names or some other questions around any stocks that you like, please feel to post those questions. I will, if I get time, I'll reply back to that. Until next time, have a good day, guys. Bye.